All right, everybody. This is Jeff Scott. This is starting this at 5 o'clock on the 13th. It'll be interrupted for dinner, so it'll get you some time. This evening, this is Jeff Scott, and this is my top-down review. I feel like I'm doing this every day. It's the third time in 7 days since I did one midweek. Breakout to new highs as we predicted a couple weeks ago. Here's my email address if you have any questions. Disclaimer, this is for education purposes only. I'm a doctor, not a broker. I have none of the licenses that I would need to invest for you or tell you what to do. So anything I suggest is purely for entertainment and education. I'm also independent, and like you, I pay for these tools. And trading involves risk, and you and you alone are solely responsible for any investment decisions you make. Make this into a slide. I do training every once in a while live, and when I do it, I always call it, it still thinks I must have two monitors going, so I guess I'm going to flip this around. All right. So when I do my education, I always call it Be Your Own Guru, because I think it's important for you to learn from smart people and then put together what works for you. I learned canceling to start with from O'Neill. Ian Woodward really helped me take it to the computer and make it better. Ron Brown became Ian's partner. Gil Morales and Chris Katcher, True Money Managers from O'Neill. My buddy George Lee. John Person, author, software developer, indicator developer, great trader, also become a great friend. He really taught me how to take a list of stocks and then how to make money with them. Van Tharp, the king of money, position size of money management, and Cigar, who has some really cool tools, of which I did put on a 12-month free trial on the board over the last couple of days. You have to register, find the link. I'll put it up again this weekend, and ask him to add you to my group, and then you'll end up getting a 1-month trial that turns into 12 months. Not a bad deal. I own a lot of computers, a lot of different technology, but what I really need is TradeStation, Thinkorswim, HGSI, and EdgeRater, and then incorporated to TradeStation and Thinkorswim are various indicator sets, including Cigars and John's for TradeStation. Just as a quick plug for HGSI, here's their website. They have a free 30-day trial if you haven't tried it before. And then under investing strategies will be a series of videos by me, Ron Brown, and others. So where are we? I said it last week. It felt like we were going to roll over, and then we had another leg higher. Monday was a little tough in the market. I think I lost 20,000, which, on my portfolio is not a very big delta. In fact, it's not very meaningful. But it was the only day I lost money, and the rest of the week was very strong. It turned out to be a very positive week for me. I hope it was a positive week for you. I do trade a big portfolio, and I'll come back to that later, which is why a 20,000 is a small delta. Big move up this week, so as I talked about, potentially rolling over, and then as we talked about, we had another leg up starting on Tuesday. So I am still going back and forth between being all in and taking a little bit of caution. And at some point, this market's going to break. We're going into August, which is a tough market. And I think I'll mention in a few slides, perhaps we run up until the Fed and then we sell on the news. So I'm getting a little bit more cautious, but that doesn't mean I'm not very much long right now. Friday sector review, as you could see here, we had utilities, healthcare were weak for different reasons. Utilities are weak because interest rates are starting to go up, and we're becoming a little bit less defensive. Healthcare is weak because we're one tweet away from new set of drug pricing. So over the last couple of months, Trump's tweets, first they killed, and the political environment killed insurers because of the Medicare for All, which is not going to happen, and those are now moving nicely. Then you had the PBMs because they were going to take away their rebates, which this week they announced they're not. But you still have a lot of concern about what changes are going to impact on the drug companies. Major markets tell a story. Let's just look at it in Thinkorswim. I think they're ready. because I can blow this up and make it bigger. The key thing about the major markets to me, especially if we before I get to the small stocks, is that on the E-minis or the S&P futures, the NQs, the NASDAQ futures, the Russell futures, the Dow futures, not the Russell futures, you're going to notice the high of the year, we're going back to the first of the year here, occurred on Friday, and that we closed near the high of the day. How much more bullish can you be? All-time highs and closing near the high of the day. Again, at some point we're going to have to go the other way, but right now the E-minis are in a nice uptrend, and they're not in a uptrend that looked like this one here where my arrow is, where it's going up too steep. It's a nice steady uptrend, and until it changes, you've got to be bullish. If I look at the NASDAQ futures, very similar story, closing at their high and taking out their triple top, which the S&P did as well. So double tops, triple tops are now taken out. That's also got to be considered bullish. The Dow futures, let me make that a full year so it looks like the others. Not that much. There you go. You could see new highs here. Very similar, all three of them, all having to be bullish. Now, the IWM is not the same. This one's different than the others. And this one is definitely lagging. And if you want to be bearish at all, you could certainly call out the fact that the small caps are lagging. And we still have a long ways to go before we get to new highs on the small caps. The VIX continues to drop down to that level, getting near the lows of the year. And when something gets close to the lows of the year, it's probably going to reverse at some point. But right now, the VIX is low and supporting a rising market. And the dollar weakened some and pulled back into the 200-day moving average. And that's obviously very important and critical if you're an investor in metals, gold specifically, I guess silver too. I mentioned that I had lost some this week. I'm up $588,000 on the year. I start with about $1 million in my trading account. There's some flows that came in recently from selling one of my boats. But based upon my initial investment, I'm up approaching 60% on the year. No, you don't go up every day. And yes, I'll probably make some comments about the impact of having a big account, how it allows me to do things that you might not be able to do in a smaller account. But frankly, I don't trade any different now than when I had a smaller account, except I don't blow them up as much because I think my trading is better, as much or more so than just the fact that I trade with a bigger account. We can look at weeklies as well, just for a second. And I'm just going to lower left, upper right, closing at all-time highs on the E-minis, NASDAQ future, and Russell future, on the Dow futures rather. The Russell even got a weekly buy signal the last couple of weeks. The VIX is down, dollar's down, so nothing exciting there. So I think this market obviously is super strong. It continues to go up even when the pundits say it's going to go down. And for now, why would there be any reason to expect anything to change? What happened underneath the indexes? Hard to see here, but you'll have to take my word that in both the 10-year and the 30-year, the rates actually ticked up this week. If I look at the yield curve, again, hard to see, and I can't change the color. I've tried, but the yield curve became wider. That's awesome because that takes away some of the risk of a recession and some of the negativity that's been describing this market. Now, if I separate this out, you'd see that the large caps on the right are setting new highs on AD line, and the small cap didn't drop as much as went sideways, so lagging a little bit. So the AD lines are being driven by the large caps. If I look at the NYSE, you can see it still went up, although the rate slowed down. And in yellow and green, you've got the diamonds and the spiders leading the way, the Russell and transportation's down here, and somewhere buried up in there you got the NASDAQ, the Qs as well. So small caps continuing to be laggards, and with rates going up, no surprise, bonds turn down. Last week I was concerned because of the 2121 being up at the top, and I said that we're likely to reverse at least a little bit or sideways, and we did on Monday. And that was it. And the nice thing is we're still below the top, so we have some room to go higher. If I look at stocks above the 200 days here, stocks above the 40s, we're both at areas where reversals can occur, but you can still get a little bit more overbought. So we're elevated, but not at obvious risk point. The daily McClellan continues to show some divergences, as does the weekly. Yeah, obviously, when you get new highs, we all start worrying about the risk of rolling over, and I think this is one thing that we have to put into the list of concerns. The buckets. Take all the stocks in the S&P 1500 as defined on July 1st. I ran it today for yesterday's results, and 71% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. That's bullish but not excessive, and very few stocks are above their Bollinger Bands. Clearly, there are very few stocks below as well. So this is bullish, tending towards overbought, but not necessarily overbought yet. No surprise, no evidence of Hindenburg's the last couple of weeks. Market tone, the IWM is the sole yellow. Now, it does show that the market's become a little bit choppier, and some of the indexes are not necessarily responding as well as others. And in fact, if you look at the sectors, we've got quite a few sectors. We've got utilities, we've got real estate, so two that might be interest rate sensitive. We've got the healthcare, which I mentioned why it's getting hurt. And then the XLY also showing some yellow there. Actually, not the XLY, is it? 1, 2, 3. It's materials and financials. So you got some mixture on sector strength. Now, the canaries, which have been down in the dumps for a long time, they broke out. Not only do they break out, they seem to be holding their breakout. Our new highs next. Big stocks in this group, many of them have earnings over the next 2 weeks. My index that I put together March 3rd hit an all-time closing highs on Friday. And this is interesting to me, not because it's gone sideways while the market's gone down, and then came back up. But it's interesting to me that we're setting new highs for this index, even though clearly the leaders have rotated out of it. So the leaders on March 3 are still doing well and hanging tough. I think this is a broad-based rally, despite the fact that from a week-to-week basis, it does appear that a different, what's the word I want to use, sector might be rotating out. News and earnings. Last week we had lots of news with the Fed head Powell speaking. We have a number of Fed speakers, John Williams, Rosengren, Bullard, are speaking. I suspect they're just going to amplify the message that we heard from Powell. And the message we heard was that they're not as concerned about some of the improving economic numbers and the rise of inflation. They still think that they're going to cut rates, and they pretty much have telegraphed a 25 basis point rate cut. We have some we have industrial production and retail sales on Tuesday, energy and housing on Wednesday, jobless claims on Thursday. So I would call this a middling week for data. Where it's not a middling week is on earnings. And as my little comment in the lower right bar says, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earning date is scheduled. Now here's just a thing from earnings.com, and this goes over earningswhispers.com, I'm sorry. Some of the major stocks, and before or after the market, just go on Twitter, put in earnings in your search term, and you'll find this. They come out every day, and they actually break down every stock and talk about it. Look at before the open Tuesday, JP Morgan, J&J, Wells Fargo, Goldman Sachs. Anything that I say right now probably is either amplified or 180 degrees different after Tuesday morning. Tuesday after the close, we got CSX. Seattle Genetics, one of the first biotechs to report. Interactive Brokers, how are the brokers doing? On Wednesday, we got Bank of America, we got Progressive Insurance, we got PNC, BNY, Comerica, so a mixture of financials. And after the close, this will be the first of the big tech ones, Netflix, eBay, IBM. How are they doing? Is Netflix, how's it handling competition coming to market? Thursday, continued to be busy. I think that says United Health Group right there. Honeywell, Morgan Stanley, Ally, BB&T. So lots of financial earnings. In the afternoon, we got Softy, Microsoft. We got Intuitive Surgical, which looks weak right now. Skechers, Bank of the Ozarks, another regional. And then on Friday, we got Iron Ore, Cleveland Cliffs, or what used to be known as Cleveland Cliffs, Amex, Schlumberger, BlackRock, Regions. Lots of different things happening this week. You've got to know when your earnings are. So what are my thoughts? We ended the week at new highs, while investors heard what they wanted from Fed Chairman Powell during his semi-annual testimony on monetary policy. FOMC minutes also supported a minimum of 25 basis point cut at upcoming Fed meeting. Economic news were mixed and showed a larger than expected increase in core CPI and PPI, but any improvements in economic upside surprises were tempered by Fed comments. Summer earnings season starts in earnest this week and next and may greatly shape yours and the market performance. And barring tweets or major earnings disappointments, suspect the markets will move higher into the rate cut. However, I would not be surprised to see a sell on the news event as seasonality and summer vacations may drive low volume volatility and we could see a sell-off on the news. So on Monday, I talked about a number of pullbacks in uptrends, and then with my favorite signals, I had taken CMG during the day. It actually gave up its gains during the week and ended up flat. I looked at home builders, MTH, I actually took the next morning, and it had a nice week. Now, these are very inexpensive positions. Somebody has said, well, maybe you get your performance because your position size might be huge. Well, let's look at this. I went long $1.20. I went long $2.55. So I went long $3.75 a share. And then I sold for $2. So I've got $1.75 invested. $1.75 per share. And I bought 3,000 shares. So that's 5,250. Is that right? Yeah, it's got to be something about that. So I'm up basically 100% of what I invested. I'm up equal to my investment after 3 days on a small investment. Ulta, I actually took it, I believe on Thursday when it started to stabilize. It never really dropped into my stop territory, but it never hit my buy stop either until Friday. So I jumped the gun a little bit. This is an expensive trade. My longs were, say, 17.75 minus 11.50. So I got about $5 per spread. 30 spreads or 3,000. So I've got $15,000 in this, and after 2 days, I've gotten back 50% of my investment. You notice that there are 4 lines there. On some of these expensive stocks, I'll actually sell an out-of-the-money call and be happy if I can get the 30 points from where I bought it to where my short call is. So both of these look good right now. I'll tell you that both CMG and Ulta look ripe. And it's funny, I stumbled on my webinar and I said Lulu for a bit before I got back to Ulta. Lulu looks pretty good today too. So let's go through my usual top-down review. So just look quickly at TradeStation for a couple of things. Where do I want to go? Let's go here. And how close are we on the high jump is a question I have to have. So I want to look at the E-minis. Remember, the high jump is something we learned from Woodward Brown, Ian Woodward. It is a sign that the market is overextended. What I'm going to show you will show you what percent of the highest extended we have been over the last 12 months. When I look here, we are the highest extended that we've been over the last 12 months on the E-minis. We're at 100%. Now, that might be concerning. It's concerning to me, and it tells me we probably are going to eventually go sideways or roll over, but we may just get more oversold. Second thing, are we in a buy or a sell? We're in a daily weekly, and a monthly John Person buy signal with those green bars, green arrows. The green bar means elder impulse indicator. It's okay to be long or hold. You should not be going short. And we're at the upper outer envelope, which we can track up, which we've done in the past. But the biggest thing here is that 100% on my high jump bar. If I look at the Dow, everything's the same. Let's look here, 100%. If I look at the NASDAQ, 98%, and obviously the small cap should be less, it's 88%. Let's go back to that E-mini, and let me just change my indicator. Studies, see if I can't do the edit studies, edit my high jump bar, customize. Let's look back at 1,000 bars. And I'm going to probably have to change the symbol. Let's see what happens here. Oops. So edit. We have to have at least 1,000 bars, so I don't. So let's go 5 years back, 4 years back, okay. And let's go back to, I must have turned it off, edit studies. I may have triggered something where it doesn't like that length. Status on, okay. Did it come back? All right, that may be the limit is 200. Let's just switch symbols and see if that comes back. All right, I guess I went beyond the limit of the analysis, so let me pause it for a second and fix it. All right, so I actually just made it 400 bars, so it's looking at the better part of 2 years. So obviously it looks a little bit better, so I get up to the 86, 90%. So when I look back over 2 years, we have been more extended in the past 2 years. Let's see if we can figure out where. I'm looking. Well, I'm not going to do that right now. So it's still, when I look at 1 year, we are still very extended. So the fact that it's over 2 years, we're only at 86, that may make me feel a little bit better that we can go higher. If I look at the dollar, dollar got a new sell signal. That's interesting. And if I look at yellow gold, we'll look at yellow metal, which is gold. You can see we've got a green bar, but we're in a sell signal kind of going sideways. It ran up. It's sort of flagging right now. So we'll see where that goes. More to follow. So I feel bullish. Actually, I'm glad I went to 400 bars because I think I've got a little bit more ammunition in my tank if I want to go further long. So now let's take a look at the markets. I use major market analysis groups, major markets plus. All right. Now, I hate using this resolution, but if I use my 4K resolution, you won't be happy with me when you try and download it, and if you don't have a 4K monitor, it'll look horrible. Let's just look at a T1, which is a top-down price and volume only view. And we notice that raw combo, right? Perfect. That you've got gold up at the top, the Dow, transports. Biotech got hammered, and you can see it down there. The dollar was weak. The S&P wasn't, well, relatively over the period of time was weak as well, although it's not so bad. Let's take a look at this and open new charting windows. I'll get my weekly here as well. Perfect. Now let me change that to the weekly view. All right, you don't see anything here because the relative strength of the S&P versus the S&P should be the same. All right, so isn't this interesting? We broke out of the box. We retested the top of the box. We're going higher. My hope now is that the top of this box, which is where the triple top was, will now become double top, triple top, depends on how many touches or how far apart they have to do to separate a double from a triple. My hope is that that now becomes support and we go on to higher lands. So S&P here looks fine. Down here it's okay. The NASDAQ composite also broke above its resistance line. Again, will resistance turn into support? It was resistance several times, so that could be beautiful. Notice how the relative strength down here of the NASDAQ is outperforming the S&P 500. That's why it's above the blue. If I look at the Dow Jones, broke above the box. Boy, that's bullish. If I look at the Russell 2000, in its trading range, but it did have a buy signal. It closed above the moving averages. Did have a pocket pivot. My indicator went positive in a squeeze. And you could see here how weak the Russell's relative strength has been compared to the S&P. If I go and I look at the dollar here, unfortunately, if you're a dollar hawk, you're probably not too happy because the dollar has turned down and looks to me like it might be heading lower, which will be good if you've got some gold, which I do. If you look at volatility, as we already talked about, it's down to where it kind of gets. So no signal there. I look at gold. You can see gold, as I said, it's kind of in a, well, I can make things up as I go, so I might as well here, see if I can find, here it is. I mean, sort of, is it going to break out of the pennant to the upside with a falling dollar? That's where I'm wagering it, and that's why I'm long gold right now. Gold miners. Doing a little bit better, getting ready to break out. And look at the relative strength of gold miners here versus the S&P. If I look at silver, underperforming. Silver's got more than just the precious value. All right, excellent. Now let's go back up here. Next, I'd like to look at the industry groups. And what we can see here is I've got 174 groups, and I've got 67 to the upside. That's improved, I believe, since Monday, but maybe down from last Sunday. To the downside, I have just 5 medical devices. Then we got medical equipment, and then 3 defensives. We got utility networks, integrated utilities, and tobacco. Now, what I thought was more interesting, if I look at 5 days down, I get to see, not this one because they're all there. Over a longer lens, that's where I start to see some of the things that have me concerned. Large pharma, specialty pharma, biotech, life sciences, generics, medical devices. So over a 5-day window of force, we have now turned negative on healthcare, and I think we're seeing that with the XLV being one of the weaker sectors right now. If I look at 5-day up, I've got 70. So that just tells me that this is not a 2-day wonder when my 5 days are also very positive. Now, what I do for my top-down analysis is I do a right-click, change the industry group, and I'll look at the top stocks in each one of these groups. NVIDIA, long-term downtrend, as indicated by this slide here where it's below its longer moving average, below the 200 on the daily. But it's starting to get a little interesting here, getting close to my magic line, and has a small dividend. It's under demand. I'll be more comfortable when it breaks above the 200, but it's got to be something you watch. Look at the strength of the industry group. Micron broke out on earnings surprise, makes money but has slowing earnings, not where I want to be playing today. Intel may be more interesting, also slowing earnings, just broke above its 200, it's in a squeeze. Mobo Breakout, Pocket Pivot, and a Kahuna. Notice on this group down here, using my momentum buy indicator, 72% of the stocks in this industry group are in a buy signal, and on Friday I had 15-2 new buys versus new sells. Very bullish. Broadcom, don't really love up here as far as growth of earnings. It does pay a nice dividend. They're in acquisition mode, and this people think that a semantic acquisition is coming. It's at an interesting buy point as it's breaking above the 50 with a Kahuna and a momentum buy indicator. NXP, sideways move. I don't see a lot of big momentum, but it's coming out of a squeeze with a Kahuna and my indicator turning positive. I'm less enthused by this one than the others. All right, let's take a look at another industry group. So I right-click, go back, highlight apparel. I'll tell you one thing that really shocked me was the retailers, especially the teeny bopper retailers that started showing up on my buy list this week. So let's look at a couple of them. I mentioned Lululemon looked pretty darn tasty to me. And here it is, a little pullback. It's breaking out again. We've got a mobile breakout from a squeeze. We've got my momentum indicator, a pocket pivot, and a Kahuna. 6-0 new buys in this group. 89% are in buy signals. Under demand, has earnings per share growth, and its relative strength exceeds that of the S&P. I like buying this on pullbacks. Here's my pullback. I think this looks buyable on Monday. Ross Stores, similar story. It's already starting to run. TJ Maxx looks the same, as does Burlington Stores. Now here's a couple that looked interesting to me that hadn't run yet. So, of course, this one's going to hide there, so let me play over here for a second. Every time I change resolution, I get into this problem here. So let me go into here, view, let's give it maybe 10 more days. All right, so what we have here is a stock that's been in a long-term downtrend. I have to ask my wife about it. She probably doesn't know anything about this one. Small PE, under demand. Sideways move, 3 Kahunas. Well, it hasn't moved much, in a squeeze with mobile breakouts. Momentum buy on both the daily and the weekly in a strong group with a bullish high close doji or bullish doji reversal. Bullish high close doji is John's signal. This is not exactly the same, but I'm hoping it works as good as his does. That looks like it's ready to roll. Buckle, it rolled on Friday. Still looks interesting. Told you there's something with these teeny bopper retails. Limited brands. Gap is another one. Pays a 5.2% dividend. You're buying it after it's been basing with multiple Kahunas. I like this group. I like Gap, and probably buy the stock because of the dividend. Communications equipment. Apple has weathered much of the storm. They even had a downgrade, and they traded down a couple bucks, and by the end of the day, they were almost back to where it started. As I look at Apple here, not much to say. It just seems to be going mostly sideways over the last 3 or 4 months in a pretty big range, slowing earnings per share growth, transitioning from a hardware to a software services company. Probably not my favorite that I've looked at today. Cisco, sideways move, breaking out. That one looks a little bit more interesting to me than Apple. This is when you want to own it. I got a cup, a handle, breakout. Maybe, I'm sure I'm over-interpreting. I like Cisco. Let's make sure it goes into my buy group. Acacia is a buyout. Harmonic looks like a buyout too. F5, nah. Arista.
Not a good idea. What are you doing?
You have to put on pause when we go.
Here, Boone.
All right, I'm back. Just ate some dinner. Let's finish up the last few minutes here. Here's Arista Network. This was a high flyer up to 336. It's down about 20% from its highs. I think there are better looking things in the group, but the group is strong and it's broken out above its moving averages. It's got the golden cross with the 50 coming over the 200. I think there's others that look better. Nothing wrong with this. And Sienna popped on earnings, sort of sideways since then. Again, nothing wrong with it. If I owned it, I'd probably hold on to it. But I'm not sure that there's not something better to buy in the group. All right, let's go back up and see what's next. Auto parts. Now, that's not a high growth stock group. Tower, I think, is in a transaction or it had something happen. So I'm going to skip that one and see if there's anything else that looks good. Downtrend, Lear, higher lows. Kind of an inverse head and shoulders here maybe, but not completed. I guess this is the part that's pretty amazing. 19 new buy signals in this group came in on Friday. Again, downtrend, doesn't make a lot of money. I think on my final list, I picked a couple of these. Aptiv, more interesting, breaking above its moving averages, mobile breakout from a squeeze. My momentum indicator as well as a Kahuna, 1.1% dividend. So this, again, is it my kind of stock? Absolutely not. But here you have Goodyear, clearly a higher low, running into resistance at the 50, so it'd have to break above that to be interesting. 2 pocket pivots, 2 Kahunas, a Mobo breakout from a squeeze. Way down in its pattern. Again, not the kind of stock I like to buy. Pays a 4% dividend. I don't think, probably not for me. Johnson Controls in the group. Earnings per share growth appears to be slowing. 2.5% dividend. Nice uptrend. I don't call this a bullish doji reversal in an uptrend. You have to be in a downtrend according to the rules. So that's that. Really nothing there. Bounced out and hit me. When I look at my things that I'm interested in buying for the week, we might see something. I don't know, I'm getting this Google Tag Manager. It pops up all the time. What else do we have here? Look at a couple more groups and then show you my list. IT services looked interesting. Now the first one, Infosys, I don't know what happened with this one. Is it a buyout? Was it just on earnings? But wow, what a move it had this week, especially on Friday. So let's look at information from the web. Go down to FinViz and pull it up. TCV, total cash value deal. So raised guidance. Well, now you're talking. So this might be interesting. Yes, it was a big move here, but in reality, it was from, say, 1080 up to 1160, 1140. So a 5 or 6% move in a strong group. Raising guidance is a good thing. It won't be reflected in here. 2.5% dividend. I originally didn't put this on my buy list. Mobile breakup from a squeeze. Bible gap up. Kahunas broke through the magic line. I think I'm going to add that to my buy list because now that I know why, it's interesting. Let's see if anything else here pops up as being, well, that's not exactly doing it the way I wanted to. So I've got to double click or it doesn't bring the next one in line. It brings it alphabetical. Accenture, what a beautiful run this has had. IBM. Nah. So Infosys from this group is the one that would interest me. Going back, let me just show you, I went by it too fast. This is what I'm looking for. Hold on one second. Let me see if I can't find that stock. I gotta go backwards. I know what the stock is. This is what I want to find. This is what beautiful is. EPAM. Mobile breakout from a squeeze. Kahunas. pocket pivots. Could have set your buy stop higher than this, and then boom, it takes off. But I missed it. Not much in the way of earnings per share growth, but a beautiful chart nonetheless. I now have a dog begging for a treat, I think. Oh, back. Okay. Let's take a look at the stocks that came up to my buy list. Let me pause this for 1 second. Take care of my dog. All right. Here is stocks that came to the top for me this week. And what I'd like to do is open this up and let's look at the industry groups. There are a lot of them here. This is a very strong market. Even though regional banks may not be performing well overall, rising rates will be good for banks. And, one day makes a difference in these because they panned them on CNBC. But here's a stock that is breaking above its 200-day moving average, coming out of a squeeze. First Horizon National Bank, and pays a 3.4% dividend. The stock before I get to that, only one biotech interested me this week, and that was Arrowhead Pharma. I got a bunch of managed care. We'll look at a couple of those. Semiconductor devices, several of them. We'll look at Brooks, maybe. A number of specialty apparel I looked at in the beginning. And then a couple of truckers look good, and I picked Knight Swift as my choice. So I would say the stock of the week is going to be Lululemon. We joke, my wife gets me because I call it Lululemon. Lululemon. And why do I say it's a stock of the week? Uptrend, sideways move, and a breakout. Mobile breakout from a squeeze. PSAI reversal on Friday. My momentum indicator fired on Friday, as did a pocket pivot and a kahuna. Strong on the weekly as well. Yes, it's run a long way, and that might be the only problem with it. But its earnings per share growth is pretty good when you look through what the market this year. Multiple is high. I still think this one goes higher. And I'll probably do some options on Lululemon or Lululemon on Monday. Now, I mentioned that managed care looked good. So let me show you. Let me go back to make that alphabetical here. And let's look at a couple of my favorite. So United Healthcare, I actually bought on Thursday when it had a great day. Went up further on Friday. You can see it broke through the magic line as well. Kahunas, pocket pivots, coming out of a squeeze with mobile breakouts, a Bible gap up. I also have a position in Humana, but I've already maxed it because I took out the short. It's above the short call position, but I still got some premium to keep. Breaking out above the 200, that one looks good. Anthem is another one that looked really good as well. These are all going up because of a ruling that's going to allow PBMs to keep their rebates. That came from Trump, who decided to not pursue something. I mentioned the only biotech I liked was Arrowhead. Why do I like it? Uptrend, sideways, and now it's got a mobile breakout from a squeeze. Kahuna, it's been a good performer, held up well despite some weakness in biotech. But look at the increase in earnings and revenue. They must have had a product come to market. I don't know them from Adam. They're not one of my customers. I mentioned we looked at a lot of, that's my dog, a lot of the apparel stocks already. 5.9 looked interesting. This is a software company. Uptrend, sort of a shallow pan. And if it can break out of this PSAR, it's going to break out and go higher. So I would look to put my stop probably right above the PSAR dot. Mobile breakout squeeze, my momentum indicator, and a kahuna firing in a group that's strong, although it's sort of a 50-50 day on what was yesterday? Friday. And what else did I like? I showed you gap already. I mean, you got a base here after a big drop. It's certainly not a growth stock, cha-cha-cha, rah-rah-rah stock. Pays a 5.2% dividend. It truly has a low closed doji right here, or high closed doji in persons, or bullish doji reversal in my terminology. A couple of kahunas. This looks interesting. So there's a lot to like on this list. even Ollie's Bargains, a stock that I've owned on the way up, I'm out of it now. Is this done going down? It's in the past, a pullback to the 200 was a good buying opportunity. It's got some earnings per share growth. It's early on in its growth phase. It's going to have store openings, etc. And what we saw in this day was a mobile breakout, kahunas and pocket pivots. So that one looks interesting as well. So let me just go put you back there. I'm not going to bother sending you my shorts list because unless something happens in the market, my short list don't matter. Another stock that looks like it's ready to go is CyberArk. And then I'll go back to my list and then I'm going to say goodbye. Long base, very long squeeze. Kahunas are coming in. A new weekly buy signal. And I like it when they pull into the magic line and turn back up. And I think this looks interesting as well. So on that note, I think that's enough things to look at. CyberArk, Gap, and Lulu are probably the three that I play on Monday. But all that depends on the market. Oh yeah, Brooks Automation is another one that I like a lot. Let's pull this up and see if I can remember why I liked it. Sideways into the 50, mobile breakout squeeze, momentum indicator, and a kahuna. Over and over again, I look for the same trade. Not as tight as Lululemon or CMG was or Ulta was, but this really looks like it's building up and ready to roll. And I like this one as well. So we'll finish up just by leaving this here and a couple of last minute comments. When I told you the performance on those picks today, I realized I was looking at my investment versus the return. That's how I look at it. At the end of the day, I look at how big my account is based upon where it's at the end of the year in the beginning, and that's how much I made, from a percentage wise. Some people might say that if I have a short position that's risking $10 and that short position reduced by cost of getting in to being $3, that 6 is not a 50% gain or 100% gain because I've got that whole $10 short spread at risk. So there's different ways of interpreting it. I had a couple questions come in after the last webinar about, gee, Jeff, it's so easy when you do it. Is it because you have a big account? And, there's no question that psychology and emotions plays a huge role in your trading. And that I can sleep at night no matter what day I have. Although I've had some good days and bad days that, makes it a little harder to fall asleep, but I can go to sleep. There's no question that that's a good thing. I don't think my performance of being up in the 50% range, which is no different than it was at this time last year or the year before, is just because I have a big account. I think I have a trading plan. I have a way of picking stocks that work for me. I have a way of buying them. I have stops. I have a way of managing the stops. And I have a way of picking my positions. I don't care if I lose on more trades than I win. I care about how much money I have left at the end of the year. And you get that from money management. Clearly, one place that I can do better is knowing when to be out of the market and not just try and manage around my positions. And I learned that in the bear market of 07, 08. I do get pretty deep pullbacks in my equity curve when the market pulls back, and then I rocket back up as I've done this year and last year. That's just something I deal with, and it's the way I like trading, but that's not for everybody. I think the trades that I show you, the way that I take them, the way I use options, I don't think it's limited by being in a big account. Yes, a big account gives me a lot of margin. It allows me to have that short position without worrying about, or to go into a synthetic with a short put sitting out there. But I think the rest is mental, and the rest is knowing when to get in, knowing when to hold them, knowing when to fold them, knowing to have them to buy, and, letting the market dictate how you do, not you tell the market how it should be doing. Find smart people and learn from them. That's what worked for me. I don't hold myself out as being that person because, hey, I don't have an offering like that. I have 1 or 2 live meetings a year maybe. I do these for fun, and I don't mentor. But people like John Person are people that are the real deal. There are plenty of others out there. The other last comment I wanted to make is about Q. I'll have the link in the letter that goes out with my videos tonight. And if you have TradeStation or Metastock, you're missing out on a free year of a product that I pay $1,500 for. on an annual basis, and it's worth every penny of it. It's just a additional indicator set for either TradeStation or Metastack. You'll have a great week. Once again, I do expect this market to roll over at some point, but with a rate cut hanging overhead, unless something comes in that questions that, missiles come from Iran, something blows up in China, or the Middle East erupts into a war, I think we'll keep moving up until we get to the end of the month. Then who knows, because seasonality goes against us. Have a great rest of the weekend. Thank you. Bye.